274, 47 shares sold. Yes, that's what happened on Tuesday this week, and let's take a look at the 2 things I learned from making $2,000 profit. Good morning everyone, this is Justine here. Hope you guys are having a wonderful weekend. I think this will be a great video to make because it not only shows my recent trading progress, but also proves that I'm not someone who always loses money in trading. Anyways, in this video I will explain what I trade, how I trade, and my 2 important takeaways from that $2,000 profit. I was swing trading DGAZ, holding 47 shares for a few weeks and an average purchase price of $228.20. I was up about 19%. Then I saw a limit sell at $274 per share, which was successfully filled this time. Thank you. Locking in a total profit of $2,148.84. Minus the short-term capital gain tax I have to pay to the government. DGAZ is an ETF that reflects inverse exposure to the performance of natural gas future index. To put it in a simpler term, if natural gas goes down, DGAZ goes up. I spotted that the natural gas future index has been trending down and has been consistently moving below the cyan color 15 EMA, meaning a 15-day exponential moving average. That tells you how these stocks has been moving in the most recent 15 trading days. You can find out more about EMA in the description down below because it has a whole lot more to it, including a formula of how to calculate the EMA value for today. So if you feel like geeking out about it and impress your friend on Monday, like, sup dude, have you checked out the 15 EMA of Tesla that has been showing signs of uptrend, which signals a good buy? But the candles are about to cross the 15 EMA, which means proceed with caution. I'm sure your friend will give you the response that you have been looking for. What? Anyways, that's called technical analysis, where you will use various types of indicators to analyze and inform your trading decisions. Some people think that it's a total gem, some people think that it's a total BS. If it works for me, that's all it matters. Since I saw the downtrending pattern of natural gas, which means there's a great opportunity in DGAZ. That's right, thank you for paying attention. Therefore, I took a few positions along the way at an average purchase price of $228.20 for 47 shares in total. And then I sold all of them at $274 on Tuesday with a total profit of $2,148.84. It just feels so great when I say it out loud. Let me do it again. $2,148.84. Now let's look at the takeaways. Number 1. Do better due diligence for even higher profit. When I woke up on Tuesday, DGAZ had already been tanking. I checked what was going on an hour after or so and I found it was selling off because the weather forecast said it will be trending colder next week, which means it's the great news for natural gas but bad news for DGAZ. What I should do instead was to check the weather forecast right after I woke up, so that I can act right away instead of letting it tank for an hour and then sell my shares. If you look at the chart for natural gas, it has been very bearish for a long time, so any good news could incentivize buyers to push up the price and change direction, which could potentially hurt my DGAZ position. Ever since my Beyond Meat lesson, I'm being more conservative and locking in profits sooner rather than letting greed take the wheel for another time. So that's my first takeaway. Number 2. Use trailing stop order, especially when the profit is increasing. In Robinhood, there's a trailing stop order option you can use. What it does is essentially you can tell Robinhood to sell your shares if the stop price drops below a threshold that you define. The gap between the stop price and the threshold that you define is fixed. So if the stop price goes up, the threshold also goes up. It basically locks in the minimum profit for you automatically in case anything goes south. For example, you bought Tesla for $500 and then it went up to $700 in 2 days. Then you can set a trailing stop order for $50, which means you create an invisible $50 gap between the current stock price of $700 and the threshold of $650. And this means Tesla can fluctuate however it wants without triggering a sell, as long as the fluctuation is within this $50 gap. Now, if it drops and crosses the threshold of $650, then Robinhood would execute a market sale, and then you will make a profit about $650 minus $500 equals $150. If it goes up to $900, even better, because the threshold will move up along with the price and give you a new threshold of 900 minus 50 equals $850. Now your minimum profit that you walk away with is about $850 minus 500 equals $350. This is a really good practice because it automates the trade for you so that you don't have to spend a second monitoring it. Also because it locks in profit for you and won't even give you a chance to experience a second of the evil greed. The only catch is, once the price crosses the threshold, it triggers a market sell, which means you don't really have control of what the actual sell price is, unlike a limit sell. But again, don't be greedy. Don't try to squeeze the last 29 cents like how I did with Beyond Meat. Thank you guys for watching. If you enjoyed the video, give it a like to help the YouTube algorithm. Hope you learned something new. Drop a comment if you agree, disagree, confused, or have questions. I feel very blessed and I'm very thankful that I made over $2,000 profit this time. So cherish what you have, learn from your mistakes, and have fun trading. Again, the WeBull and Robinhood referral links are down below in the description if you want free stocks. Their platforms are also free to use, zero commission trading. Check them out. Alright guys, that's it for today. Don't forget to comment down below, like, subscribe, share. See you in the next video. Cheers!